How the Bitcoin halving could impact the market in 2025. Bitcoin halving events have historically marked pivotal moments in the crypto landscape. With the most recent halving in 2024, the stage is set for potentially transformative changes throughout 2025. As Bitcoin's block reward dropped from 6.25 BTC to 3.125 BTC, this fundamental change in its supply mechanism has far-reaching implications, not just for miners, but also for investors, traders, institutions, and the broader financial ecosystem. The halving's scarcity effect, psychological hype, and economic impact often reshape the entire market landscape. Before we get started, subscribe to our channel and turn on the notification bell so you never miss our latest content. Reduced supply and increased scarcity. Bitcoin's halving slashes the reward miners receive for validating transactions, directly reducing the rate at which new Bitcoins are introduced into circulation. In 2025, the impact of this reduced supply could be fully realized. With fewer Bitcoins entering the market daily, basic economic principles suggest that if demand remains constant, or increases, prices will rise. Historically, halvings have preceded bullish runs as markets respond to this scarcity. This scarcity effect is one of the key fundamentals driving long-term bullish sentiment. Investors often interpret the halving as a signal that Bitcoin is becoming more valuable due to its deflationary nature. As 2025 progresses, the tighter supply could become increasingly evident in pricing dynamics, particularly if institutional and retail demand grows. Miner revenue pressure and potential shakeouts. Miners play a vital role in the Bitcoin ecosystem, and halving events cut their earnings unless price action compensates for the loss. With the 2024 halving reducing block rewards by half, many miners, especially those with high electricity costs or outdated equipment, may struggle to maintain profitability. This could lead to a wave of miner capitulation or industry consolidation in 2025. Only the most efficient mining operations are likely to survive, and we may see an increased focus on renewable energy, advanced mining rigs, and strategic partnerships. As unprofitable miners drop out, the network's hash rate may decline temporarily, but it will likely stabilize. The overall security of the network remains strong, but the business side of mining may look very different by the end of 2025. Price volatility and speculative hype. Bitcoin halving events are often followed by a surge in speculative interest, and 2025 is unlikely to be different. In the months following the 2024 halving, price movements have already hinted at increasing volatility. As more investors look to capitalize on historical halving trends, the market could see rapid swings in valuation. Speculators, institutional players, and retail investors alike may fuel momentum-driven price action. FOMO, fear of missing out, can push prices to unsustainable levels before sharp corrections occur. In 2025, we might witness Bitcoin reaching new all-time highs or retracing sharply depending on macroeconomic trends, investor sentiment, and media narratives. This volatility could offer both opportunities and risks, particularly for traders and short-term investors. Institutional adoption may accelerate. Institutions are playing an increasingly central role in Bitcoin's ecosystem, and the 2024 halving may enhance this trend throughout 2025. With Bitcoin's supply tightening, institutional investors could view it as an even more compelling hedge against inflation and economic instability. Major asset managers, pension funds, and even governments may increase exposure in search of long-term value. The halving adds credibility to Bitcoin's scarcity narrative, something institutions appreciate. Furthermore, the evolution of Bitcoin ETFs, custody solutions, and regulatory clarity in some jurisdictions may make institutional participation more seamless than ever. As demand rises and supply constricts, 2025 could mark a major turning point where institutional money becomes a dominant force in driving Bitcoin's price and mainstream legitimacy. Impact on altcoins and the broader crypto market. Bitcoin's movements often set the tone for the entire crypto market, and its halving is no exception. When Bitcoin becomes more scarce and potentially more valuable, it can either draw capital away from altcoins or uplift the whole market through a rising tide effect. In 2025, many altcoins may experience renewed interest or face capital rotation depending on how Bitcoin performs post-halving. If Bitcoin enters a strong bull phase, altcoins could see increased investment as investors diversify gains. Conversely, during Bitcoin dominance spikes, altcoins may underperform. Additionally, altcoin projects with real utility, solid tokenomics, and strong communities are more likely to benefit than speculative or meme-based coins. The halving's ripple effect could drive an evolutionary phase in the altcoin sector in 2025. Strengthening the long-term store of value narrative, Bitcoin's finite supply is a cornerstone of its identity as digital gold. The 2024 halving reinforces this narrative, and by 2025, we could see Bitcoin more widely embraced as a long-term store of value. As global fiat currencies face inflation and economic uncertainty, Bitcoin's predictable issuance schedule becomes increasingly attractive. Investors may start viewing it not just as a speculative asset, but as a safeguard for wealth preservation. This shift in perception could deepen mainstream adoption. While gold has held the store of value title for centuries, Bitcoin is emerging as its digital counterpart, portable, divisible, and borderless. The halving strengthens its position by ensuring that the supply curve remains fixed, regardless of external economic conditions. Enhanced media coverage and public awareness. Every halving draws media attention, but the aftereffects often extend well into the following year. In 2025, Bitcoin could become a regular feature in global financial news outlets due to rising prices, institutional movements, and increased adoption. This media exposure helps educate the public, bringing in new investors and users who may have previously been skeptical or unaware. As journalists highlight Bitcoin's performance and scarcity mechanics, curiosity could lead to broader participation. In the age of social media, viral stories about Bitcoin millionaires, ETF launches, or political endorsements could further fuel public interest. Halvings not only impact price and supply but also serve as powerful catalysts for public education and adoption. This could mark 2025 as a breakthrough year for global crypto awareness. Potential for regulatory shifts. As Bitcoin gains momentum post-halving, governments and regulators will likely increase their focus on the market. In 2025, we may see new policies crafted to address Bitcoin's growing influence, particularly if prices soar and adoption spreads. Regulatory frameworks might aim to protect consumers while enabling innovation. Countries may differ in their approaches, some encouraging Bitcoin as a legal asset, while others tighten controls. If you enjoyed this video, give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. Thank you for watching.